Hey folks, welcome back. It's been a bit since I last dove into IREN Limited, the renewable-powered data center powerhouse that's blending Bitcoin mining with AI cloud muscle. If you've been tracking these energy tech plays with me, you know the space is electric right now. We're zooming in on the last 3 to 6 months of action, where headlines scream growth but the stock's taken a punch. No advice here, just the rundown to help you connect the dots. Let's unpack it. Operationally, IREN's been firing on all cylinders in the pivot from pure mining to AI infrastructure. Back in early September, they hit a milestone with their Childress site in Texas, ramping to 40 exahashes per second up from 28, powered by 100% renewables for that ultra-efficient edge. Fast forward to October, and they're stacking NVIDIA preferred partner status, unlocking access to cutting-edge GPUs for AI clients. The real fireworks hit November, a blockbuster 5-year, $9.7 billion GPU cloud deal with Microsoft, deploying GB300 chips across 200 megawatt of data centers. That's a 20% upfront prepay to fuel CapEx, with IREN eyeing a jump from 23,000 to 140,000 GPUs by end 2026, potentially $3-4 billion in annual run rate revenue on just 16% of their power capacity. December sealed it with massive infrastructure moves, closing a $2.3 billion convertible notes offering to repurchase high-cost debt and accelerate builds, plus securing 2.75 gigawatt more grid power in West Texas. Horizon One's 50-megawatt liquid-cooled AI center, on track for Q4 2025 energization, with Sweetwater's 1.4 gigawatt substation following in April 2026. They're pausing mining expansion at 50 exahashes per second to laser focus on AI ops, where margins hit 75% on hardware. Talk about smart allocation in a market where AI is devouring power like never before. Financially, it's a tale of explosive tops and gritty bottoms. Q1 FY26 ended Sept 30, dropped record revenue of $240.3 million, up 355% YOY and 28% QOQ, driven by mining strength and that AI revenue kicking in at $3.2 million, up 28%. Adjusted EBITDA clocked $91.7 million, net income soared to $384.6 million, boosted by unrealized gains, and cash swelled to $1.8 billion by October end, thanks to $1 billion in zero-coupon notes and $400 million GPU financing. No long-term debt is a flex, giving them dry powder for the $391 million Q3 CapEx blitz. But here's the rub. Gross margins held at 75% for mining, yet overall costs spiked on expansion. Think design tweaks and scaling pains, leading to some quarters where profits dipped below expectations despite the revenue pop. They're guiding for FY26 revenue north of $564 million and EPS at 38 cents, with AI HPC as the rocket fuel. Now, the stock, oh boy, what a ride. IREN rocketed 371% over the last 6 months, smashing past the finance sector's 8.8% gain, fueled by that AI hype and BTC's surge to 94Ks. It peaked at 76.87 in early November on the Microsoft buzz, with volumes exploding. But then the pullback, down 42% from that high to today's 39.69 close, after a 6% dip and 34% YTD overall. Why the slide amid all this green? Profit-taking after the monster run, classic momentum unwind. Earnings reactions stung too. Even with blowout revenue, unmet EPS whispers, and rising OPEX, up on CapEx and AI builds, spooked shorts. Broader market jitters hit hard. AI data center bonds tanked in November, Oracle's delays to 2028 flagged supply chain woes, and crypto volatility, BTC's swings, amplified minor beta. Dilution fears from the notes and that class action lawsuit noise over Childress disclosures added fuel. It's trading at about 19x sales now, steep but down from frothy highs, with a beta over 2, so expect the swings. Analysts are bullish overall. 11 buy ratings, median target 72.56, up 83% from here, highs at 136 from Cantor, though JP Morgan's underweight at $28 cites peer value gaps. Peering ahead, 2026 could be IREN's breakout. Management's betting on $3.4 billion AI run rate by year-end, with EBITDA margins at 85% on those hyperscaler deals. Microsoft's just the start, with a trillion-dollar player eyeing Sweetwater. Hash rate hits 50 exahashes per second mid-year for steady BTC cash flow, while data centers balloon to 910 megawatt. Tailwinds? Renewable focus keeps costs low, break-even BTC at 36K. And that 2.9 gigawatt secured power across 2,000-plus acres positions them for the AI power crunch, projected at trillions by 2030. Risks? Execution slips on builds, counterparty hiccups, one big client is big exposure, or BTC AI hype fades could bite. But with no debt and cash distributions teased for 2025, the setup's primed if they nail milestones. IREN's threading Bitcoin's volatility with AI's insatiable demand, and these last few months show the pivot's real. From miner to multi-gigawatt landlord, it's a story worth watching. Why the drop when news is this stacked? Hit the comments with your read, like if this cleared the fog, and subscribe for more on AI energy mashups. Catch you next. Stay powered.